So Sibanye is important and relevant because of its history, I think. So it started off as being a spin out from Goldfields and really hit the scene in 2013. And there was a lot of perception around at the time that these were not the greatest assets in the Goldfields stable, and this is why they were separating themselves and trying to exit the country. And since then, Sibanye's really proven itself and those assets to be really good. They've been a bit of a champion of South African mining, and they've gone on with those tailwinds of success in the gold mining space and moved into platinum, where they see similar opportunities where they can leverage those skills. And they've really kind of proven people wrong about the common rhetoric that South African mining is on the decline, that it's a dead industry, and that we don't really have the global skills and expertise anymore. So this management team has really built up a very sizable business and competitive business in the global space in the precious metals industry. It's certainly been a headline grabber, and part of that is because of the size of the transaction. And the total acquisition price was $2.2 billion, and we haven't seen something like that in the South African mining space for a good number of years. Ever since the days of Anglo spinning off into Anglo Gold Ashanti, this has been one of the real headline-grabbing deals in South African mining for a very long time. And I think the next step in that being interesting is that it's Sibanye taking South African funding and expertise and investing that in the US. So it's really moving from a position of strength. It's not kind of exiting the country. It's not a divestment story. It's really this continuing trend of the South African champion and taking a South African way of doing business and showing that it's really relevant on the global platform. Yeah, so it went through a number of steps and approvals, and you've got US oddities around antitrust laws and additional layers of approvals that are required. And they managed to get that all within the time frame that they promised to shareholders initially. And the shareholders really came to the party in this deal, and I think that was one of the things that we've definitely got to laud Sibanye on, in that we've never seen a management team spend so much time on the ground and traveling to China, the US, UK, and European countries to really communicate the messaging of the transaction. And I think that when you do something that's kind of doubling the size of your company overnight, you've really got to work hard to make sure that people understand why you're doing this. And when you're paying a full price for an asset, that you communicate why in the long term this is going to pay off. And they've really done an excellent job in getting the shareholders on board. And I think that's been something that's evident in each step of the transaction, where at the bridging stage it was oversubscribed, at the rights issue it was oversubscribed, and subsequently in the bond issuance it's also been oversubscribed. So they've really had a good swell of support from the public globally for the transaction. So generally, in the mergers and acquisitions side of things, depending on your legal jurisdictions involved, you want to show as strong an offer as possible early on. And the best form of consideration is cash. And people always prefer a cash deal to having shares in another company that they're not familiar with, for example. So Sibanye put a very strong offer on the table that was hard for others to beat by saying, okay, we're going to pay you $2.2 billion in cash upfront. And they had that fund certainty, which we call it. In the US space, you need to show that you're actually good for the money. And that bridging finance was that confirmation that Sibanye's got access to the cash. And that gave them the kind of headroom to then take it out with the right capital structure in their view, which was to bring in a component of equity and debt to make sure that the company wasn't excessively geared and so exposed to more risk than they should have been. Look, I think yes and no is the answer, unfortunately, to that, in that you've got to have the right support from both debt and equity providers to be able to do this. I don't think that any company could go and necessarily double its size overnight, and particularly not unless you've structured the deal in such a way that you can make sure that the risks are kind of managed at each step of the way and that you've got the necessary support for each stage in the game. So I think Sibanye managed to do that in a very intelligent way, and they've structured the deal well. They had the right support from the South African international banking fraternity, and they also managed to get their shareholders across the line. And I think you can implement similar structures for companies in the local space. It's not a factor of Sibanye being listed on the New York Stock Exchange through its ADR program, for example, but it's good to be able to access those liquid capital markets. And certainly I think that the South African shareholders did contribute a lot to this transaction. And it's, again, a testament to the depth and liquidity and sophistication of our financial markets. We've seen in this transaction a couple of themes that have repeated themselves for companies who are JSE listed and then also have an American exposure, typically through ADRs or American depository receipts. So we were involved in the transaction from step one being the bridge. So we funded into the bridge. We had a commitment that was sort of north of 4 billion rand, which was a sizable check size for us, and then participated as the only South African bank in the equity underwriting consortium. And the importance of the equity underwrite was really to give Sibanye as a management team and also the shareholders the confidence that when they go to the equity market, that number of cash that they're looking to raise is guaranteed. And particularly given the concerns around the local mining industry at the moment, the publication of the mining charter, which we managed to get the deal away slightly beforehand, but those residual concerns, I think that certainty added a lot of value in that process. And then towards the tail end, we were a co-manager on the bond raising process, and that took out a large portion of the residual bridge. So it's really partnering every step of the way with a client that we view as a core relationship for us, and moving with them in this international acquisition. And it's something that we are doing more and more of. I think that South African banks are sometimes not necessarily seen as material global players, but we were up there in the equity underwrite with the likes of Citi and HSBC, who are real international investment banks with global reach, and some of the biggest banks in the world. And we were standing alongside them in this transaction, which shows that the South African industry can really hold its own amongst the top players in the game.